Hi, everyone. I'm James Garbutt,
And I'm Denny Dumas.
and this is the Garbutt Dumas Real Estate Podcast.
Monica, I got a news flash for you. If you own a home in Greater Vancouver, any type of home, single family, townhouse, condo, and you bought it a few years ago, if you bought a townhouse or a house 12 months ago, or a condo 5 or 6 years ago, guess what?
What?
You're rich.
What? Are you telling me the market has improved?
What does that mean? And how do you access that equity? And a conversation we're having with a lot of our past clients at the moment is the idea of refinancing, pulling out some equity and investing in other places, whether that is stocks, crypto, are we allowed to say that here? Mutual funds, like anything. But obviously the big topic that we like to share our experience on is investing in real estate and what that looks like. And I think a lot of people don't really understand how much housing prices have gone up. And if you bought a single family home 5 years ago for 1.2 and it's now worth 1.7, you can potentially access 80% of that equity to invest in another property potentially or another thing. So I think if you're interested in the idea of investing in real estate, interest rates are super, super low, and pulling equity out of your home doesn't cost you as much as it used to. I think it's good to have these conversations with your mortgage person just to understand what those costs are going to look like, how your monthly expenses on your primary residence are going to be affected. But then with your realtor to kind of share some ideas on where to invest and how to do that. So I think for this episode, we just kind of wanted to share some different ideas, and we're going to take a pretty specific scenario that, let's say someone who bought a townhouse a couple years ago or a house a couple years ago that now has gone up $300,000 or $400,000 in equity, and they're going to pull out 80% of that. So they have, let's say, $250,000 to $300,000 to work with. Where to put that, and what does it look like? What are the pros and cons of investing in a presale new construction project versus potentially a resale condo? So what does that look like?
Yeah, there's some exciting options right now for you if you bought real estate within the last 5 years. Like Denny just mentioned, resale and presale are your two options right now. Resale has pros and cons, and some of the pros are you know what you're buying. You know what you're buying. You can research the strata. The building has some history behind it. You can walk into it, look around, you know exactly what you're getting. The second you purchase it and complete, you can rent right away. You can start receiving money to help with the mortgage and to build equity immediately. Resale is really exciting. I love investing, so this is an exciting subject for me. There's also no uncertainty with timing. You know, like again, that the home is done, the home is built, and you can lock in your interest rates. You whatever you have approved for, you can use that exact approval to purchase your property. There's no question marks. There's nothing. You know exactly what you're getting. With presale, pretty much none of those things apply. You can't rent it right away. You don't know what you're getting.
Let me quickly touch on the financing thing. I think this is really important, and we'll kind of share some cautions when you're buying new construction. But if you're buying resale, rents have gone up a lot in the last 24 months. So the likelihood of being cash flow positive is quite a bit higher than it was a couple of years ago, which means you're not paying anything out of your pocket per month to own that asset. The tenant is paying your mortgage, your strata, your property tax in a lot of cases. With the financing, when you complete on a condo, let's say, you are signing a contract with a bank to take out a loan for X amount of money at this interest rate. The bank, every time you renew, if you're staying with the same lender, for most lenders, is not going to reassess your property. So if in 5 years from now, when your term is done, the value of that asset has gone down, they're not doing a new appraisal and saying, oh, wait a second, we can only lend you up to 80% of that appraised value. So we actually have to, you have to pay us more money. It doesn't work like that. Versus in presale, that is one of the big cautions, is that if you're buying a home or a condo that is going to be complete in 3 years from now, you are probably under the assumption that, or doing your calculations off of today's interest rates, which are at all-time lows, 1.5%, maybe less. If those rates go up, and let's say we have a bit of a slowdown in the market, and that property that you paid $700,000 for is now worth $650 or $625 or whatever that is, a bank is going to do an appraisal at the time of completion. And if, rarely does it happen in Greater Vancouver, but we've seen it happen, and we've seen years that it does happen, where now you're getting an appraisal at $650. The bank is only lending you 80% of that $650. So the potential for your down payment having to be higher is a caution and just something to consider.
Right. That's probably the biggest risk that I think of when thinking of pre-sales. I love pre-sales for many reasons. That's the one big risk item that I like to caution everybody with, is the interest rates and your property appraisal. What I love about pre-sales is, other than that, they're very low stress. You find a property that you like, a developer that you like, in an area that you like, you put down your deposit, and that's it. You get updates from the developer every now and then, letting you know, if completion's on time or not. If you're lucky, you're playing the market a bit. You're assuming that the market's going to go up. You're paying, say, $750 for a townhouse or a condo today. It's probably going to be worth $850, $950 by the time it completes. It's great. And you have two options still when you buy presale. You have the option to complete if you feel like it's a good investment and you want to keep it and you want to rent it. Rents are really good in the area. You have the option to keep it and complete. Or you have the option to reassign the contract. If you feel that for example, if the property is supposed to complete in 3 years, but the market is going up, and you feel that you can get a good price on the reassignment, and you get out of paying GST and completing and going through a bank, and you just want to profit on your market timing, that's an option too. So pre-sales give you some options. They're low stress and low risk mostly. You are buying a brand new product. It will be under warranty. Deficiencies will be covered by the developer. So there are a lot of low stress items that come with pre-sales.
There's a lot of advantages to pre-sale. One of which that I really like is deposit structure. So if you're buying resale and you're completing in 2 months from now, you're putting, in most cases, if it's going to be an investment property and you're renting it out, you're putting 20% down in 2 months from now. So you need that 20%. Versus in a lot of pre-sale new construction projects, these deposit structures vary greatly. And I'll just share one from Amazing Brentwood, which is releasing phase 5 this week. Their deposit structure is really spread out, which as an investor is very appealing to a lot of people. I believe it is 10% on your contract. The next 5% isn't due for 18 months. You're waiting another year and a half to put the next 5% down. And then the last 5% is 30 months from your contract date. So another year for that final 5%. So your 20% in resale is due in 2 months from now, for example, versus your 20% in that specific new construction project is due in over 30 months.
That's awesome.
Yeah.
That's a really, really good deposit structure. And again, you still have options. You can still reassign it if you don't want to complete, or you can complete and put a tenant in there.
There's a lot of different ways that developers do business, and understanding, if you're thinking about potentially assigning the contract, understanding what those assignment terms are. A lot of developers, well, first of all, they're going to charge you a fee for doing an assignment, but a lot of them in their disclosure statements say, one, the project has to be completely sold out. What they don't tell consumers is that a lot of developers intentionally hold units back and wait till, for this specific example in Brentwood, Amazing Brentwood, this is going to be like a 4-year build, and they'll hold, let's say, 10% of the units back and then release them. I'm not saying Brentwood exactly, but sometimes developers will hold 10% of the units back and release them like a year before the actual build. So in that first 3 years, the development is not sold out. So the likelihood of them allowing you to assign is quite low, and you do have to have written consent from a developer to assign. The other thing that they often put into contracts about assignments is that you can't market the assignment. You can't post it on MLS. You can't. Sometimes they'll even go as far as saying you can't use social media to promote it. So basically, when you hire an agent, a realtor to help you assign this condo, we're really just marketing to our database, and we're connecting with every realtor that we can in Greater Vancouver to share information about it. But a lot of them do kind of try to handcuff you in terms of where and how you can market assignments.
Right. Yeah. So yeah, if we're looking at resale versus presale, Denny, if you were going to purchase a property this year, what would you do? Resale, presale? What would you do?
Right now, I'm going presale. I'm going longer term outlook, something like Amazing Brentwood that is 4 years away.
I think I'd probably do resale.
Interesting.
The rates right now are so good.
Totally.
Rates are so good and the rent's really good. Yeah.
If this is your first real estate investment, you also have to consider if you want to be a landlord. Do you want to answer the phone at 7 p.m. on a Friday evening because someone's toilet handle broke? Like, do you want to do all that stuff?
Fireplace switch to work.
Yeah.
It's a common one.
Yeah. Or the light bulbs are out, or little simple things. But do you want to do that? And if the answer is I'm not sure yet, maybe you steer towards presale. If the answer is yeah, whatever, I'm going to buy a 3 or 4 year old place, the likelihood of getting those phone calls is pretty low, especially the fact that rentals are so busy. And when you post this thing on Facebook Marketplace, you're probably going to have 30, 40 people reach out to you wanting to see it. And you get to be really selective about who you pick as a tenant. And, I haven't seen a rental market this crazy in my career. And so as an investor, that might steer me towards resale just because I have the leverage of being able to pick a really, really solid tenant.
All right, we're going to level up a little bit, guys. Here's an option. Buy something really affordable resale and presale that you maybe can't quite afford. Build some equity in the resale for a few years, and then when it's time to complete on the presale, you sell your resale and you purchase your presale.
Now we're getting into the realm of getting sued. Monica wants all your equity in your home and she wants to help you spend it. Yeah. No, there is a lot of options out there, and I really enjoy having these conversations with consumers because a lot of people just don't know how achievable this actually is. Especially, I literally had this conversation last night with a past client who bought a townhouse 2 or 3 years ago. It's gone up $350K. 80% of that is whatever, 250, roughly 275. And that is a ton of money that you don't even have to access all of it. But if you access 200 grand of it to buy an investment property, like in 5 years from now, all that rent compounds really quickly, paired up with the potential for market gain. Like these are life-changing opportunities for a lot of people that it is really exciting to just kind of share opportunities with our consumers. Like a lot of our consumers are, normal young couples, young families that work normal jobs, and this is really life-changing money that they've built in their home in the last few years, and like a real good opportunity to set their family and their kids up for success down the road.
It really is. It really is a good opportunity. The one thing that Denny mentioned that a lot of people overlook is the work that goes into it. As if you're a landlord, there is a lot of work that goes into it. But before that, there's a lot of work that goes into picking the right investment property for you. I have a few young couples, first-time investors that are looking for the first investment property right now. And they're out seeing properties every weekend and reading documents every Monday, Tuesday, just to try to make the best decision. It's a lot of work, but it's worth it.